Hello traders, Gary Wagner here. It is approximately 10:40 in Honolulu, 4:40 in New York City. It is the very first day of the month, May 1st, 2012, and this is the daily report for gold and silver. Both gold and silver, in fact almost all of the precious metals except platinum, are a little bit lower this morning, off about $2.50 currently on gold. Has a low of 59.40, high of 72.30. Silver currently off about 4 cents with a low of 30.72 and a high of 31.45. Traders, there can be no doubt we are still within a congestion pattern, or what I like to call this triangle correction. Let's take a look at our Henkin chart. First of all, 770-minute Henkin chart. And as you can see, the candles themselves are still green even with the market down. That is because when you draw a Henkin candle, you're actually fixing the open off of the midpoint of the prior session, in this case 770-minute bar, so the prior bar. As you can see, we have a smaller body size, which in essence tells us that any kind of steam that this trend originally had, at least for now, it has kind of eroded, as you can see in here. So we've got a little bit of a sideways activity as we take a look at this market in here. Now, when we convert this to a standard candlestick chart, you'll really be able to see the difference. I'm just removing it. And here you can see the difference in that this prior bar shows the down momentum, as I said, off a couple of dollars today, but it has risen quite eloquently, I think, off of this support line. This to me was that critical area. And at least for now, it seems as though it has passed the test and is finding a base and moving higher. So traders, in essence, what we are looking at and what I think in terms of the market scenario itself, what I think is most plausible is I do believe that we have completed our third leg right in here. And it is also my belief that we have entered our fourth leg. That fourth leg should take us to the top of this resistance area. We'll simply have to follow it down to see where it wants to meet in terms of the tact or the angle at which it moves up, if in fact we're correct and it moves up. And then most importantly, my belief is that as we reach the apex of this triangle, we should get some sort of a sizable breakout. At least that's the theory. So what I'm looking at is one more move up, should stall somewhere around this top resistance area, a final leg down, and then what's called the thrust. And of course the thrust is significant in that it will break above the resistance line, and most importantly, when it breaks above the resistance line, of course, you get energy released. This compression, this market going into a tighter and tighter range. And when we look at that tighter range, really what we're looking at is the fact that when we make our low here, the next low is going to be a higher low. When it comes to make a high, the next high is going to be a lower high. And so it will carry its way all the way to the apex. Once we hit that apex, of course, we should get a breakout to the upside. Silver. You know, silver has been, I'd like to say it's been tracking funny, but that's not really the case. It's been tracking in a very tepid way and actually fairly weak. And I was hoping that we would see something significant in terms of a base being formed, a break to the upside, so that we could actually go ahead and issue a buy signal. We have not been able to. Why? Well, the market hasn't shown us any real resilience and any real strong upside moves. In fact, when we take a look at this downward slope, what we are getting is a series of lower lows. Then we get our high. We get a lower low, a lower high, lower low, lower high. We get this double top right in here. And as you can see, we get a low which is a little bit below this. The high is absolutely below the last high. And so right now, the fact that it made this low below our major support level and came back up, that gave me some real hope that this market would form a base and take off. But as you can see, it hit some real resistance right up of just above $31 per ounce and has been meandering lower. Until we see something substantial in this market, my recommendation is to sideline, because what I'm looking at is as follows. There's two different scenarios that we'll want to play, and that's if the market is unable to hold the support level right in here, there's a real opportunity to see this market trend lower. The next real support level is going to be about $29.50. It's based upon these lows right in here. And of course, real significant support is at about $29, $28.84. As you can see, that's the 76% retracement level. Now, do I think the market's going to go that low? Personally, I do not. But I have to acknowledge the fact that we are not seeing any kind of real strength in this market right now. My recommendation again is sideline on silver. Maintain long positions in gold. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Must be the season of the witch, yeah. Must be the season